Welcome to Everything Money. In this video, we will look at two companies, ContextLogic, ticker symbol WISH, and SoFi. The goal of this video is to show you why you should potentially avoid these companies if you're value investing, avoid the hype, all the other chatter. We will show you the fundamentals and the financials behind these companies using our exclusive Everything Money software, and we will show you a stock price we're thinking about paying for this company. It's going to get ugly here because we want to avoid some of these. If you're looking to trade this with Mo at a quicker pace, you can trade these new companies, and Mo will show you how with the trending charts. But first, who are we? I represent you, the viewer. I bring your normal person questions to a couple wealthy guys that manage over $100 million in real estate, stocks, and businesses. 8 or 9 businesses, Paul. That's the running joke. Give us your thoughts on these stocks that you should avoid, Paul.
Thank you very much, Seth. First off, follow us on Instagram, new Everything Money account. Also follow our personal accounts. We really appreciate it. So here's our Everything Money software. So here's the issue, Uncle Seth. Let's go to the first one, ContextLogic.
Yes.
Guys, as a value investor, the past isn't always going to dictate the future, right?
Mm-hmm.
But I like to look at the past because when you look at a company, let me ask you this question. If you're looking at two businesses, one was run by a 22-year-old kid who just got out of college, and one was run by a 50-year-old who had been there for a long time, had the business for 30 years. Which one would you rely on the past metrics for a little bit more?
Well, it looks like the YouTubers of today who are these young kids with less experience love talking about these high-flying, recently IPO'd companies.
Yep.
But obviously, as I get more mature in my age, I learned that old granddad with like 100 real estate units is probably the guy I want to follow, right?
Now, not necessarily that, but which one's financials are you going to rely on more? I'm not saying, because guess what? I can't stand the old guy who's like, I've been doing this for 40 years. It's like, well, great. If that's your only testament to how good you are, you're terrible. You're almost as bad as a 22-year-old punk.
That's like Dave Ramsey.
Yeah, exactly.
Dave Ramsey.
I just believe in looking at companies who have a long history so I can see how they've behaved during good times and bad times. ContextLogic, WISH, that's their chart. Mm-hmm. Okay, let's look at their income statement.
Probably pretty good.
Sick. 2 years of data. Okay, they've lost money. So first off, I'm going to tell you, this is not useful for us. I'm used to looking at companies like, even if you like Tesla. Tesla at least has tons of data. I can go back and see the revenue growth in Tesla over the last 10, 11 years. I can see the profit growth. I can see the financials of the company and sit there and say, hey, you know what? Elon's a nut job, but he's done a really good job growing this business, and it's probably going to continue growing for a foreseeable future. We won't get into the valuations, but the whole point is ContextLogic has no history, has zero history. I mean, not zero, but they have. Oh, this is showing Tesla still. I don't know why that is. Oh, that's why. ContextLogic is showing me nothing. I have nothing here to show for it. 2 years of data? What's that proving me? All losses? It's not showing me how they can make money. If they sat there today and said, oh, we're going to have 10% profit margin, I have no idea.
Well, they say, they say that. They probably, the trends are, well, this is an online shopping store. Online shopping is going up. This must be incredible, so let's invest, right? I mean, why are YouTubers making videos
Great.
If
about that's this? The case, go to your local high school field and go pay $20 million a year for the kid in the field who everybody says is going to be the next Mike Trout or Bryce Harper. Go for it. How's that going to work out for you? Everybody's trying to find the next best thing, the next big thing. Avoid that. Avoid these stocks that have no history, that only lose money, that have no path to showing you, here's how we're going to make money. And if they do show you that path, my comment back would be, well, you haven't shown me that you can make that money. All I see here are losses. So if you told me your profit margin is going to be X%, I'm going to say, I don't know if that's true. I have no idea if that's true. And they're going to lose money for a very long period of time while they get to that level of growth that they need to do to sustain everything. Next thing is shares outstanding. Look at that. That's a 20% growth, not a 15% growth in the last year. They're diluting the heck out of their investors. You know, we look at this 8-pillar tab. Nothing. Why? Not enough data. We can't even analyze the data of the company on our 8-pillar system that's done so well for so many people because of this. And this is why we created the software, was that people could do it in their hand, on their phones, on their everything here, and we can't do it on this company.
What about SoFi, Paul? I mean, now SoFi's they're advertising. They got the whole stadium, right? Isn't there SoFi? One of the basketball arenas. I mean,
no, it's football.
Oh, football. Thanks. Yeah.
Okay, so SoFi.
Oh, yeah.
Okay, let's go to their income statement. Sick. Even less information. Nice job, SoFi. Let's go to the quarterly data. Yeah, I don't know what to say, guys. Guys, to me, this is me speaking. You're going to tell me, Paul, you're missing out. I am missing out. I don't understand this. So I'm disciplined enough to say, if I don't understand it, I'm out. But I'm telling you, if you say you understand this, you're delusional. Because you're not watching this YouTube channel because you understand the financials of SoFi. I'm sorry. You're doing it because you're an average person, which is awesome because we're all average people just trying to learn something.
But isn't it fun to try and catch one of these, Paul?
Great. Then follow Mo and trade the stock based on the price and nothing based on fundamentals. Because I look at this. This is what I want to do, Seth. I want to find the good company that has a lot of history that's selling for, look at our 8 pillars tab, all 8 check marks. Values are good. All the metrics are good.
Buying back shares.
And guess what people are going to say to me? Intel's his example. That's a dead company. Okay. Tell that to me in 2011 when I bought Microsoft at $22 a share and every tech industry expert was telling me I was wrong. Very well could be. Intel could be, AMD could surpass Intel. But I'd rather buy Intel at these prices because it'll still do well over long periods of time as they buy back shares. We're trying to teach a process here on this channel. That process doesn't exist with SoFi and Wish yet. Let them get to cash flow positive. Let them get to an established benchmark where they can go, hey, Warren Buffett always says, Warren Buffett and Charlie Munger always say, if I cannot, with reasonable, not certainty, but a reasonable assumption, determine how much money this company can make in the next 5 or 10 years, I'm out. And on SoFi and ContextLogic, you have no idea how much money it's going to make in the next 5 or 10 years. We don't even know on Intel, but at least with Intel, I can look at this income statement and go, you know what? They're pretty effing good at making money. It just goes up and up and up and up and up and up and up. And that dead company has doubled their profit in the last 10 years.
So what about investors out there, Paul, who are looking at Wish and SoFi and they're thinking, well, if this happens and if that happens and if all this stuff happens, this stock could explode.
Guys, you can't even tell me what's going to happen in your life in the next 7 days. You're going to tell me what's going to happen in a company in the next 10 years where you can't control a single thing? You're out of your mind. I know what you want to happen.
Yeah, want.
I prefer to invest in a company where I go, okay, let's assume they screw up. They're saying we're going to have 10% revenue growth. Let's say they have 5.
Yeah, they call you too conservative when predicting.
Great. Guess what? There's 10,000 companies out there. You need 20 or 30 that I'm too conservative on to make a ton of money.
A ton.
A ton. This software, if it helps you increase your returns by 1 or 2% a year, you're going to make hundreds of thousands, if not millions of dollars extra. And you get this all for 90 cents a day. That's what the amazing part is, Seth. Like, we sit there and we talk about things and talk about a process. 90 cents a day gets you this entire software on the phone, everything, and you can do it and talk to other investors, 6,000 other people who use this software on a daily basis, and talk to them about it for 90 cents a day. So that's my quick pitch, by the way. Everythingmoney.com or Patreon. Sign up on either one. And the benefits of everythingmoney.com is you don't get pay sales tax yet. And you don't get double charged in the first month. So it's going to be cheaper for you any way, shape, or form than Patreon. Sign up now because the price will go up every single month.
This is somewhat of a contrarian view. If you've been shopping around YouTube and seeing videos on these two companies, they're probably telling you how amazing they are. It's very hard to find people like us, Paul, that say you can potentially avoid these at the moment. But if you want to trade these at a quick pace, that's not an avoid. You can follow the trends. The trend's your friend, and Mo will show you how right now in that beautiful Bid-Ask Nation.
So even with both of these charts, neither company has been around for a full year. What's the other one?
SoFi and Wish.
They're almost there. Today's November 1st, November 2nd. They went public on November 30th of 2020. This company, December 16th or something like that. So I like to look at my entire chart. I want to have 1 year of data. That gives me the entire book. So what would I do instead with these? I would go over here to the 15-minute chart. This is Wish. This is Wish today. And this is a perfect day trade. Because what I'm seeing right here, I look at 3 things. Trend, volume, engulfing candlesticks. They tell me when to add and when to get out. I'm looking at my trend right here, and you are below 20%, and that is your percent K right over here. As long as you're under 20%, between 20 and 0, you can go ahead and short a stock. Next thing I look for is volume. They're selling volume coming into this stock. And the third thing I look for is these engulfing candlesticks, and you are getting them, and you're still getting them right now. And the only thing right now you have to do is just enjoy the money that's building up in your account on this short. Next thing you have to look for is as soon as this stochastic line pops over 20%, exit your position, lock in your gains, pay your taxes, and you're good. That's it. That's as easy as these come. Let's look at the SoFi and see if there's anything going on today. Okay, what is this? Oh, this is soft. Let's type in SoFi. What do we have here?
This is the daily?
This is the 15-minute chart.
Wow.
So let's look at yesterday, for example. Yesterday was a very perfect setup. Same thing. This yesterday you were going long on this. You were over 80%. You had good buying volume coming in. You had amazing engulfing candlesticks running up, and you took your profits about 12:30 yesterday, and you just counted all that money that you made during the morning. So that's how easy this is. If you want to learn a day trade, come to the Bid and Ask Nation. There's daily seminars that I will do that give you access to these 15-minute chart trading, and you learn how to use a 15-minute chart and make profits and not just throw Hail Marys and hope that things happen.
Final take on your mindset on new companies, Paul.
Oh, wait till the dust settles and you can put a reasonable valuation in the company because you know what they're. You have a reasonable idea of what they're going to make in the next 10 years.
Yeah, this feels a lot like gambling. I mean, if you
It is gambling.
If you want to do it like the old investors who are the best at this, find a great company that's been around and then wait for a great price, and that's how you can make a ton of money, as Paul would say. So, join us for our next video. Fondle a thumbs up, and we'll see you in the next one. Thanks for watching.